Take a look at this. Since it launched in August of 2020, the global carbon ETF KRBN has returned over 150%. That's fucking wild. Let's take a deeper look at the KRBN ETF and carbon credit investing. First of all, what the hell are carbon credits? Well, carbon credits are transferable financial instruments that represent 1 metric ton of carbon emissions. And there's two types. There's voluntary carbon offset credits, which these types of credits are created by somebody doing something to offset carbon somewhere else. So for example, somebody replants an area of deforested land. Subsequently, what they're doing is reducing carbon in the atmosphere, and there's certain certifying bodies out there that issue carbon offset credits that companies can buy voluntarily. Now, why would they want to buy them? Well, maybe they want to achieve or claim to achieve net zero carbon emissions. So for example, if a company is, well, this is a great example in my own personal life, American Airlines, I saw in their pamphlet, was saying we are a carbon neutral company. Well, this company is flying jets around in the sky. Naturally, that's emitting a lot of carbon, but what they're doing is they're buying these voluntary carbon offset credits to counter their own carbon emissions, and now they can claim they're carbon neutral. The other type of carbon credit are compliance credits. In these types of credits, the compliance credits are what financial instruments like KRBN in the futures markets deal with. As the name implies, compliance credits are issued by a government, ultimately to control the amount of carbon that is released in one area, and put a price tag on it. Because carbon emissions, assuming going with all of the, I don't want to say conclusive, but the largely overwhelming majority of scientific community that says, hey, carbon emissions are detrimental to the environment, they are a negative externality. These compliance credits are issued by a government to put a price on that and ultimately drive down the carbon emissions or offset them. Right? And things like the Paris Agreement are ultimately creating demand for these credits and creating incentive or driving governments to create these carbon credits and issue them and require companies that are emitting carbon to buy them. This report here from JP Morgan actually has a lot of great information on the Paris Agreement and ultimately its goals. Its goal is to constrain global warming to no more than 1.5 degrees Celsius by the year 2100. And it was created in 2015. The U.S. was a part of it back in 2016, I think, under the Obama administration, or 2015 under the Obama administration. Then Trump came in 2017, removed us. Biden put us back in. And there's a really cool chart here. I'm not going to go through all the data, but there's a really cool chart on this page which shows the countries or regions covered by carbon regulation, 2010 versus today. And we can see the trend. More countries are coming on board with it. Looking back at 2010, it was basically just Europe, not even all of Europe. There's the UK right there not participating in it. And, a little bit of Canada, and then I think that would be New York. Here in 2021, a lot more countries have gotten on board with it. The US just got on board with it in 2021, so I would expect, under the Biden administration, so I would expect maybe some type of regulation is coming to the United States, and I think more countries will join this Paris Agreement, with the scientific community. And I do agree with the scientific community. Carbon emissions are causing climate change, which is going to negatively impact our survivability as a species. I don't know exactly what to call it, but it's ultimately going to impact our lifestyle on the planet if we don't do something about it. So yeah, that's how the Paris Agreement is ultimately influencing demand for carbon credits, or driving the creation of carbon credits, which subsequently, if they're going to reduce the amount of carbon that's out there, companies are going to have to control it, and they're also going to have to pay for these carbon credits. And so far, what we're seeing is it's a lot easier for companies to pay for this stuff, or pay for offsets, than it is for them to actually reduce carbon emissions. Now, let's go to KRBN ETF here. We're going to go to their actual page here. And their fund highlights, I kind of found this stuff interesting here. According to IHS Markit, as of December 31st, 2020, the global price of carbon was $24.05 per metric ton per ton of CO2. It is estimated that carbon allowance prices need to reach $147 per ton of CO2 to meet a 1.5 degrees Celsius global warming limit. So that's the Paris Agreement. So to meet that limit, the current prices of carbon credits need to basically, 6x to ultimately reach that. As of December 31st, 2020, the three largest global carbon futures markets tracked by IHS Markit's Global Carbon Index had a market size of 260.79 billion. So, that was on December 31st, 2020. That was over a year ago. This is now January. I think this is 19th or 20th. What day is today? Today is January 20th, 2022. So it's been more than a year at this point. Let's see what we'd estimate the carbon market to be at today. And what we can do is simply we can go to the carbon ETF. And what date was that? That was December 31st, 2020. We can just take the KRBN performance if the chart loads here. Hurry up, Morningstar, hurry up. All right, we'll just set this back to December 31st, 2020. Now we can see that since December 31st, 2020 here, the carbon market as represented by KRBN has increased more than 105%, 105.46. So we can take that number and we can multiply it by the number that was given to us here, 260.79. Let me do the math. I'm typing this in all wrong. 260.79 times, what was it? I think 105.69? 105.46. So the carbon market's a little bit more than doubled. Yeah, so today an estimated valuation on them using the numbers provided here in the Crane Shares website would not be that. It would be $535 billion. So the carbon market has rapidly grown. I think some of this probably comes from speculation demand. I think it would be naive to say that the demand for these carbon credits has just increased double in the last year, basically. Naturally, I think with the launch of this KRBN ETF, more investors can get their hands on it. So some of it is certainly speculative driven. In April 2019, the Financial Times reported that carbon allowances with the European Union were the world's top performing commodity. Yeah, that's kind of like a given. China's emission trading market is expected to launch by end of 2020. And I believe they have, but I don't think they have a futures market. So yeah, I guess while we're talking about all the highlights here of carbon, as discussed by KRBN, let's talk about the actual underlying index. So KRBN is benchmarked to IHS Markit's Global Carbon Index, which offers broad coverage of cap and trade related. So I found some information on them, and we can see the index going back to July 31st, 2014 here. So interestingly enough, while it looks like since the launch of KRBN, carbon has just gone up, carbon does not always go up, and we can see it here in the first couple months of our first couple of years of this index, 2014 to 2017, so 3 years here. Carbon actually went down before going into a rapid bull market here, doubling in price, doubling in value, tripling, roughly tripling, and then coming back down, and in 2020, we can see a drop. So that means that carbon is not uncorrelated totally to financial markets. There's a saying in the quantitative world, when correlation goes to 1, shit hits the fan, or when shit hits the fan, correlation goes to 1. Basically, when everything goes to 1, there's a fucking problem, right? And it's not good. Things are all usually going down. And that's what happened in 2020 here. Carbon was no exception to that. We can see it dropped. Obviously, we know going forward it rebounded, but the point I want to make here is just looking at KRBN ETF, this thing looks like it always goes up over its year and a half period at this point, whereas it does not when you look at the index. Now, the index is comprised of 3 carbon futures markets. So a second ago, I mentioned China. Well, China is not represented in the index, or in this index, at least as I can find. So if we look at it here, I think it's page 4. and this is the Global Carbon Index Guide by IHS. And page 4, page 3, there's 3, all right. Accessibility of futures markets. Okay, so the KRBN ETF and the underlying index hold and trade futures. And we can see the 3 futures markets that it has exposure to. The European Union Alliance, the California Carbon Allowance, and the Regional Greenhouse Gas Initiative. Now, naturally, I'm thinking 3, that's not very many. It doesn't have China, but more could come on board. So if you look at this, IHS Market may consult with IHS Market Global Carbon Index Advisory Committee to review potential carbon credit futures for inclusion or existing carbon credit futures for exclusion, dependent on the developments in the respective market. So new futures markets could be added to the KRBN ETF, but they could also be removed. And, well, as we saw here, this is how the index has performed. Now, some other basic details on KRBN. It's issued by CraneShares Global, but Global Carbon Strategy ETF is it. It's issued by CraneShares, and it's got net assets of $1.6 billion. So I'd say that's relatively high for a newly issued fund by a relatively small fund issuer. And a total annual operating expense of 0.78%. Now, while I have to say that fundamentally I think this is a little high for, an ETF that does what this thing does, you have to consider the competition. Ultimately, at this point, KRBN has basically no competition out there, so they can basically charge whatever they want on their expense. It's just kind of where they can price it in the market and where they can actually think they're getting assets under management. And for the explosive growth that KRBN has had, I don't think investors are really bulking at, or the majority of investors are going to bulk at that 0.78%. Yeah. Otherwise, let's see, what haven't we covered here? Oh yeah, the fund holdings. If we go to, I think this one here. Dun 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 dun. Where is it? Fund holdings. Why can't I find it? Don't know why, but I couldn't scroll down. All right, so if we look at the holdings here, it's going to show us the carbon allowance futures, right? So these are the holdings, and then it's also showing collateral and currency. So if we look at the top 10 holdings, they're basically going to be all cash, or cash-based, cash equivalents. Anyways, the futures are what we're concerned about because they're securing these futures with cash. Now, I don't know if they're, I didn't see anything about leverage, so I'm going to guess that it is 1-to-1. With futures, they could easily leverage this thing up. And I didn't see anything in reviewing this, document here. I didn't see any leverage mention. Let me just type in the word leverage on Control F. Okay, so it's not found in there. But if we come back here, we can see, what they're holding. European Union, California Carbon, European Union, Regional Greenhouse Gas Initiative, RGGI, UK Allowance future. Okay, so this actually wasn't mentioned in the document, so this must be a new futures market that they've added, and ultimately the sum of it all holds up to 100%. European Union, I think, is making up the bulk. Yeah, the bulk by far at about 62%. So yeah, if you want to get exposure to the carbon market and capture some of the demand, it seems like demand is going to be growing. It seems like, to me personally though, like with this rapid growth, we might be in a little bit of a speculation bubble. So I would not be surprised if there's a drop. No one really knows, but it does seem like there's a little bit of speculation bubble going on here. My approach, if I wanted to get exposure to the carbon market here through KRBN ETF, would be dollar cost averaging. That's commonly my approach for things that are not quantitative momentum trend based. That's a whole nother topic. The big focus of my research area, my own personal investing, is quantitative momentum and trend. But I do have exposure to other assets and stuff. And when you get into them, with the potential of, or not the potential, but the plan to hold them for the long term, I like to dollar cost average into those positions. So let's just say that I want to put 100 grand into KRBN rather than just going in all in 100 grand today into KRBN. Personally, what I like to do is just kind of break it up and say, all right, I'm going to put in 2 grand a week for the next year, or maybe I'll be a little bit more aggressive, 5 grand a week for the next year. So that way, if it does come down, I get some exposure on the downside, but if it goes up, well, I also had some exposure right from the get-go in where it's going. So yeah, I think KRBN is certainly a good way to get exposure to, well, it's the only way at this point, to really get exposure to the carbon credit market, which personally I think is going to go up. I think there's going to be an increase in demand for these carbon credits. So what do you guys think about KRBN and carbon credit investing? Let me know in the comments below.